Entrepreneurs, welcome back. Today we're doing part 2 of the 2-part series on business sectors. You have learned about the intricacies and what each sector means in video 1, and today in this short video we're going to look at how they interact. You know, it's like a gear. So stay tuned, make sure you like, hit subscribe and share it with everyone. See you in the video. Alright, in this video we're talking about the interaction and the interrelationship between the 3 sectors. If you don't know the 3 sectors, go back and watch the first video. Alright, so when we talk about the interaction, this is how they rely on each other, and there's different steps to when they get to each other. So you can see there's 3 different gears moving. Now one gear turns the other gear, which in turns the other gear. So if we have these 3 gears as an input, we will get a specific output, and for that we call that the economic growth, right? A country can only grow the more GDP we have, and that stands for gross domestic products. That's all the products that we can produce in a country in 1 year. So we need these 3 gears to turn. So the first gear is your primary sector. This is the extraction. The second gear is your secondary sector. This is the manufacturing. And the third gear is your tertiary gear. Now we need all of them together. So let's look at how they interact. The primary sector, they supply the secondary sector with raw materials. Why? That's their job. They extract and then they give the secondary sector the raw materials so that the secondary sector can convert it or manufacture final goods. The secondary sector, after fulfilling the function of manufacturing, they provide the final goods to the tertiary sector to be sold to the consumers. That's the job of the tertiary sector. The primary sector can also supply the tertiary sector with final goods. For example, if a farmer, he harvests his apples, he packs it into packaging bags. The product, the final product has not changed. We still have an apple. But now they sell it next to the road on a farm stall. That is primary, that's directly to the tertiary sector. That's a good example to remember. Now the tertiary is the service sector. They provide services to the secondary sector. Think about banking, think about insurance, think about transport. Anything the secondary sector needs, they can get in the tertiary sector. For example, every business, manufacturing business, needs a bank account. They need to take out insurance in case something happens. That is where the tertiary sector services the secondary sector. The secondary sector also plays a big role to the primary sector. Now, if you think primary, it's extraction. We need to have equipment, right? And who's the manufacturers of equipment? That's in the secondary sector. So a farmer will go to someone in the industrial area that's manufacturing tools and equipment and dyes, and they'll say, listen, I need this and this and this equipment, these tools, so that I can farm effectively. And they'll build it and sell it directly to the primary. So that's a good example. The tertiary renders the exact same services to the primary service as it does to the secondary sector. And now the 3 last ones is the primary service can actually help out other primary service businesses. For example, a farmer can have his corn business, right? He can harvest a lot of corn. Then he can get all those corn kernels and then he can supply that as seeds to another farmer. So that's primary supplying to primary. Secondary to secondary, a good example if you think about Volkswagen. That's a car assembly plant. So it needs to get different car parts. So if it buys tires from, for example, Continental, and it assembles it to their Volkswagen Polo, the tires itself is a final product. And a half-built car will be sold as a final product. So both is in the secondary sector, and they rely on one another to produce a final product. And tertiary to tertiary, easy one. If you have a bank, let's say we're talking about F&B, they need to take out insurance against people that can rob them, or against something that can happen. Or let's say if you have a transport business, they need a bank account, or a doctor needing a bank account or taking out insurance. So this is the tertiary sector helping out the tertiary sector. So I hope you've listened, you've understand. Make sure you watch these videos in revision again, and then see you in our next videos.